Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market and weekly recap. Filming this video on a Saturday, guys. My apologies last night for no video. Had a few things to take care of, so we'll take a look at things today together instead. So in Friday's markets, what exactly happened, guys? Well, we had a gap up open on the morning into some profit taking for the remainder of the day, which begs the question, was the NVIDIA euphoria after earnings just a temporary thing, or will it continue into next week? We're going to take a look at the technicals on our major indexes and major tech names, see if we can find some clues whether or not the bulls will have the continuation factor going for them next week, or are we potentially due for a little bit of consolidation? Also in today's video, we're going to cover two earnings from you guys. Number one comes from a subscriber request, Jeremy requesting, hey Will, can you tell us what happened to Rivian for the 25% drop today? So we'll be covering Rivian earnings and exactly what led to that 25-30% plus drop after earnings. And we also have another company that I really like, guys, that I need to present to you guys, a well-known international company, but doesn't get talked much about by retail investors, and that's going to be Mercado Libre, ticker symbol MELI, extremely promising growth company. Now, we're also going to take a look at the end of the video after we do our big tech rundown. We have another subscriber request. Can I take a look at Toll? Feel like it's a great long-term buy. Also, can you look at Intel after its big drop today? Thanks. So perfectly, we're going to cover Intel at the end of the rundown. So after our big tech stocks, after PayPal in the end, I'm going to be doing a technical analysis on Intel here. In terms of Toll Brothers, they had earnings just last week. We can do those Monday after the close together. So keep a look out for that. And if ever you guys have any questions and want me to cover them on the channel in a video, always feel free to leave a comment and we'll do those before, over and above anything that we previously have planned. So Friday's markets, guys. SPY up 0.07%, QQQ down 0.29%. And across the heat map was a fairly mixed market. Big tech pulling back ever so slightly here with some slight gains by only Amazon and NVIDIA holding up those post-earning gains. But for the most part, little bit of consolidation on big tech. But the bottom half of the market did a great job in keeping up the rotation, namely in healthcare and financials. Those are really what was helping keep the SPY notably green on the day because QQQ was obviously lacking. So before we get into more technical analysis, let us first look into Rivian stock and tackle their earnings. Now, Rivian, after their earnings, take a look here, guys. Posted some earnings, a little bit of a miss on EPS, and they did beat on revenue. So a bit of a mixed report, but the decline came from their guidance, and the guidance was not very good. You can see here in a 2-day drop, the stock is down almost 35%. So what exactly happened for Rivian to be down 35%? Their guidance, guys, was just not good. So Rivian said Wednesday it sees vehicle production for 2024 hitting only 57,000 units, well below the 80,000 units expected. So there is the reason for your 30% drop. We have a 30% cut on guidance, as a matter of fact, right? So if you just take 57,000 divided by your 80,000 projected, you'll see here that 1 minus this number is roughly a 29% miss on your guidance, and the stock reacting proportionally down pretty much over 30% with a bit of that negative connotation on the headlines here. Rivian said it sees an adjusted EBITDA loss of 2.7 billion versus 2.59 billion expected, so more of a loss in terms of guidance than previously expected, with capital expenditure outlays hitting 1.75 billion versus the 2.37 billion estimated. So they're going to spend less on capital expenditures, but still their earnings loss is going to widen a little bit. That was counterbalanced with a little bit of positive news in terms of Rivian saying it's going to cut 10% of the salaried staff. So trying desperately to cut some of their costs as the company does remain unprofitable. Keep in mind this number right here, guys. 2.7 billion in pretty much operating expenses losses right here, plus a $1.75 billion in capital expenditures that's going to go on through the next year. You'll have an extra $4.5 billion almost exiting the company, and the company is still having a decent amount of cash on the balance sheet, but it's running out. So here's a few of the headlines that I have prepared for you guys, and then we'll take a look at some of their investor slides together. So number one, Rivian, if you don't know what they do, guys, they are an electric vehicle manufacturer, and their products are actually liked by the consumer very much. If you go on YouTube and see some of their product reviews by a lot of people who review cars and whatnot, the reviews are overwhelmingly positive for the most part. So the brand is favorable in the eyes of the consumer. They have won 2021 pickup truck, which is this model right here. They obviously have an SUV as well. They're coming out shortly with an R2, which is supposed to be a lower price point SUV vehicle between the $40,000 and $50,000 range, which is coming out March the 7th. So looking forward to see that. And then they have their fleet vans, which they're in partnership with Amazon. They used to have an exclusive partnership with Amazon, but Amazon has since released them from that exclusivity portion of their contract. But also quite nice in terms of those vehicles, guys. So here's a few of the headlines. The positive consumer sentiment of the brand, which is what we just discussed. The expenses are coming down, but there's still negative margin and still negative free cash flow. Take a look down here, guys. This company, since being in existence, has been able to raise revenues over quarterly basis and on an annual basis as well. However, they're just not profitable yet. Still running at negative net margins on a yearly basis, and even on a quarterly basis, guys, still not having a quarter where they are positive. Now, they are caught up in a bit of an interest rate cycle, which is kind of really hurting demand. But that's not specific to Rivian here, guys. It's really an industry-wide problem. Take a look at this article that I pulled up from pretty much this past January. Industry pain abounds as electric car demand hits slowdown, and you have a bunch of headlines from all your vehicle manufacturers saying that it's the same for them. So investment in capacity and technology development has outrun actual EV demand. Now, this is a byproduct of rates, but also a byproduct of the auto industry slowing as a whole because of those high rates and because a lot of people already purchased and financed their new cars back in 2020 and 2021 when cars were cheap. So take a look at General Motors. It's true, the pace of EV growth has slowed, which has created some uncertainty. We will build to demand. General Motors. Ford also previously cut EV production due to a growth rate that is rising more slowly than previously expected. That doesn't stop there, guys. Tesla CEO Elon Musk underscored the near-term struggles, warning last week of a sharp slowdown in sales growth this year. So there's three, but it just continues, guys, and even the battery manufacturer is slowing down. CATL, the world's largest EV battery maker, faces challenges from smaller rivals and slowing demand in China, the largest EV market. Global EV momentum is stalling. The market is oversupplied versus demand, says Morgan Stanley. Albemarle, the world's largest producer of key EV battery material lithium, said it was cutting jobs and capital spending in response to slipping prices. Meanwhile, even German EV sales, including plug-in hybrid models, fell 16% last year and are forecast to drop another 9% in 2024, including a 14% decline in pure battery EVs. And even Polestar, another EV startup which was spun off from Volvo, last week said it planned to cut about 15% of its workforce due to the challenging market. So it's not a Rivian problem as a whole, guys. It's really an EV problem to begin with, industry-wide. Now, their cash runway is thinning. They have about $9.2, $9.3 billion on the balance sheet that they can use, but when the company is spending anywhere between $3 to $5 billion a year just to stay alive, that really leaves them a cash runway of about 2 years and a half, max, before they potentially have to go to capital markets to raise more money. That would either be debt or shares, either which is kind of a dilutive experience for current shareholders. Now, we have the reduced guidance of 30%, which we just went over in the article. The timing of the IPO, guys, that's something unfortunate with Rivian. Now, yes, they started off at an extremely overvalued market value, in my opinion, when they IPO'd, but the timing of the IPO was just not favorable for the company as a whole, guys. I'm pretty sure they did not expect inflation and rates to spiral out of control only 2 years into their production ramp. So that has really been holding them back as well. Now, a few positive things as well. We do have that R2 release March the 7th. So that's their 45,000 vehicle, and it should be well received by the consumer. They do forecast to be gross profit positive in Q4 of 2024. This is what the CEO just said on the earnings call. So at least their cash burn should stop come Q4 of 2024. And then they have their continued partnership with Amazon, which just gives them some brand credibility as well. So all of those headlines, guys, were the key takeaways here of the Rivian earnings. We also have a few select comments from Elon Musk after their earnings, right? So Elon Musk says Rivian needs to cut costs massively and his execs should live in the factory just like he did, or the Tesla rival will die. And it sparked some pretty big controversy on Twitter when he said that. So he said that they need to cut costs massively and the exec team needs to live in the factory or they will die. Musk, having gone through production hell and sleeping in the factory himself at Tesla, should know. The billionaire has warned about Rivian's challenges before. In June 2022, he said his advice for the company would be to cut costs immediately across the board dramatically, or they're doomed. So really some doom and gloom from Elon Musk. And here's the tweet that he's referencing here. Their current trajectory, talking about Rivian, has them bankrupt in roughly 6 quarters. Maybe that trajectory will change, but so far it hasn't. Well, they are supposed to be positive in terms of gross margins in Q4 2024, so that should actually prevent them from going bankrupt if they're able to deliver on those expectations. Now let's take a look at some of their slides here and see exactly what's happening in their shareholder presentation. So they have a 167% increase in revenue in 2023 as opposed to 2022. That's good. They're expanding, guys. They have 81K gross profit per vehicle improvement in Q4 23 compared to Q4 22. This is a fancier way of saying we're just losing less money per vehicle. They used to lose about $125,000 per vehicle, and now it's only down to about $43,000 per vehicle. But everybody knows, except for Tesla, most people do lose money while producing EVs, even the legacy auto manufacturers, which just goes to prove how hard it is to scale one of these brands. And they exceeded all aspects of 2023 guidance. This is true. So let's dive a bit deeper into their report and see if we can see any useful insights here, guys, especially in their balance sheet. Now, Rivian, since they're burning so much cash, it is front and center for them, and they have made some improvements on how they're dealing with this. So they realize it's a problem. Our cost discipline has resulted in meaningful improvements in operating efficiency during 2023. Gross profit per vehicle delivered improved by 81K, as we were saying. Now, capital expenditures reduced by $343 million during the same period. Our company-wide cost transformation program resulted in meaningful reductions of costs across each major cost category: material cost, manufacturing overhead, and logistics. By incorporating new technologies and renegotiating supplier costs, we've reduced the material cost per unit. We expect to realize further cost reductions following our line shutdown in the second quarter of 2024. So in Q2, they're going to shut down one of their factories and repurpose it to be more cost effective. So at least they're moving in the right direction in terms of managing costs, but they're kind of living on a very, very tough timeline right now in terms of having enough cash to survive most of this demand drawdown. Right now, here's their production and deliveries. You can see that they have been doing a good job of scaling their business. They produced 17,500 vehicles, delivered almost 14K in the fourth quarter of 2023. Now, they didn't deliver all of their vehicles. Amazon actually held back some of their deliveries during Q4. Amazon is notorious for this, guys. Not only with Rivian do they do this, but Amazon rarely accepts deliveries of new products and or robotics in Q4. It's their biggest quarter, and they want to get through that in a streamlined fashion without too many service interruptions. So that being said, they will be taking the remainder of their deliveries this Q1. So at least that's good for that. So that's why you have a little bit of quarterly drop off here in deliveries. And they mention a bit of seasonality to the commercial business was a primary contributor to the difference. And that is the reason behind that headline. It's really the fact that Amazon just pushed back their deliveries by a quarter, but are still willing to take deliveries of the vehicles. So at least that's good here, guys. Now let's dive down into a bit of their financial statements, which I want to show to you guys. And we're going to see exactly how this business is positioned for the remainder of the future here. So you can see that their gross margins, albeit that they are improving, they've struggled a little bit to maintain those gross margins low as they had in Q3, a little bit more expenses. But you can see overall, guys, this trend on this line is a net improvement, really for showcasing that they've been doing a good job of cost management. Now, if you take a look at their R&D and their selling, general, and administrative expenses on a quarter-over-quarter basis as well, they are remaining roughly flat. You don't see some major explosion to the upside here, which would be bad for the company. This is scaling at the same time as they are scaling their revenues. Not that much discrepancy there, but obviously the business is still operating at a bit of a loss and losing free cash flow as well. No secret there. Now, in terms of the assets, what I want to show you guys is they do have a decent amount of assets on their balance sheet. They have $7.8 billion in cash, and they have $1.5 billion in short-term investments. So that gives them a total of about $9.3 billion in cash. In terms of their debt here, guys, they only have about $4.4 billion in long-term debt, but only about $2 billion of that is due before 2027. So bit of a misleading number here. If you think this number is high, not a lot of that comes to maturity before 2027. So at least they still have some room to run here. But as we saw in their previous guidance for the year right here, they do expect to outlay about $4.5 billion over the course of the year, which is obviously going to take a little bit of a chunk from this 9.2, roughly cutting it in half. So hopefully for them, they're going to be able to be profitable by Q4. Now, another thing that I did want to show you guys, if my PDF reader is going to cooperate here, is the shareholder compensation for this company, guys, is a little bit too high in my personal opinion, especially when you're losing money. So take a look at this stock-based compensation. You can see that it's down slightly from 2022, but still about $800 million, guys. And when you have a company, right, that's bringing in about 4.43 billion in revenue, that's a fair share of the revenue, right? So if you take 800 million divided by your 4.5 billion roughly, it's about 17% of revenues, a bit too high, especially for a company that is not yet making money yet. So I really would like to see this come down. I know growth companies are notorious for this, of paying high shareholder share paid compensation for management and executives while they're growing. But still, guys, when you're strapped with cash and when demand is not there, you really should be cutting back on your compensation packages for management and executives. Those can be pushed back. If you do expect the business to be profitable, well, then just push them back until the business is profitable and get through this difficult period where you have lower demand due to higher interest rates. So those are a few things about Rivian, okay? So number one, the business, I actually do like the business here, guys, right? I like their product. I like the business as a whole, and I do believe they can be a significant competitor in the EV market in the next coming years. That being said, they really have to focus this year. It's do or die for them, in my opinion, guys, right? Through 2024 and 2025 is going to be the 2 years where Rivian can really prove to us if they're actually able to become profitable at scale, which is such a hard thing to do. But at this current share price right now at about $10, the risk to reward is now better than ever if you are willing to take that chance in the company. In terms of risk, guys, it is about an 8 out of 10 for me. A 10 out of 10 would be a no-name penny stock. But this business, since it is a cyclical business, interest rates aren't going to be coming down drastically over the next year or two. So they're not going to be coming, rates are not going to go from 5% to 0 overnight, right? So it will take some time. So Rivian is operating on a little bit of borrowed time currently, but still, I do believe in the company. The valuation right now is not that bad at $10. Keep in mind, at $10, the market cap is about 9.65 billion, and they do have about 9.2, 9.3 billion of cash on hand. So it is trading roughly around book value if you were to include their property, plants, and equipment as well. So at least their valuation in terms of that has come significantly down to where it's at, to now where it's actually a decent bet if you are a believer in the company. Obviously, I cannot recommend this play to anybody. It is extremely risky, but it is a high conviction play if you are a fan of the stock. I see no problem with taking a little bit of an entry down here. Can the price fall to potentially $9, even in the $8 range because of negative sentiment recently? Sure, of course it can. But just to say the downside right now is relatively limited. And in terms of the upside, guys, I would be able to see Rivian over the course of the next 12, 16 months roughly. If they do perform to their obligations correctly, there's no reason, in my opinion, that this stock can at least trade for about 2 times their book value. So that should be about, $20, $22. I know this book value is going to come down as they continue outlaying cash, but at that time, they should be gross margin positive, which is going to be improving their financial metrics a little bit. So all that being said, guys, hopefully I've conveyed the reason for the Rivian drop here. Very unfortunate for the company, but just as a whole, it's not company specific. Yes, their demand is slowing, but as I showed you guys, that is a byproduct of the entire industry slowing down as a whole. And now the second company that we're going to be taking a look at, guys, is Mercado Libre. So Mercado Libre is one of my favorite growth international stocks. Take a look at the growth of this stock, guys, since 2017, 2018. Really now starting to expand. And I don't bring up international stocks that often, but when I do, they have to be an industry leader. So Mercado Libre is one example. You guys may remember when I brought up Evolution AB, which is ticker symbol. I don't know why it's not coming up, but it's EVV. TY. They were the gambling and casino play based out of Europe that I recommended a few weeks back in terms of taking a look at the company. Another one of my favorite international companies is going to be TSM. And the last one that they bring up, that I bring up on the channel quite regularly as well, is going to be Louis Vuitton in terms of their international brand and their dominance in that sector that they operate in. So I don't bring up these companies internationally, on an international basis that often, but when I do, they're usually extremely extremely solid, and we have to take notice of them. So what does Mercado Libre do? If you guys don't know what Mercado Libre does, guys, they're pretty much the retail and fintech leader in Latin America. So they operate a similar business to Amazon.com, where they have a website in which they enable third parties and themselves to sell products in an e-commerce style, warehouse style business. And then number two, they also have a fintech division, which could be compared to somewhat of a cross between PayPal and Square. They have an application that's kind of like Cash App, which allows people to send money from peer to peer, so from me to somebody else, or to use that as a payment processing software similar to PayPal. So it's kind of like a cross between PayPal and Square and their Cash App and Venmo applications as well. So they really do it all, guys. This company is extremely low debt for what they do as well. Take a look, guys. They really don't have a lot of debt. This is a company that just in the past year have brought in pretty much over $12 billion, $14 billion almost of revenue in the past year in 2023. Not up there yet, but you can see they came into this quarter only running about $6 billion of debt. They've since brought that down to about $5 billion, and cash equivalents, you can't see it right here, but it's sitting at about $4 billion right now. So in terms of their cash that they have on hand versus the debt, really low debt profile for the company. I love to see that. Their free cash flow is growing quickly as well. Their margins are expanding quickly as well. Take a look here at your margin expansion. They used to be negative as they were growing, and then 2021 they finally turned a profit 1%, 2022 5%, and this past year they've put in about 9.5% of profit net margins to the bottom line. Take a look here, guys. Their expansion curves are absolutely beautiful. Take a look at this EPS ramp right here. We're talking about a 51% gain in EPS over the next 3 years. Looking forward to that, and also a consistent revenue increase as well. This company really reminds me, when you take a look at their revenue growth curve and how fast their customers are growing, it reminds me of Amazon back in 2016, 2017. This is 2016, 2017 is where Amazon really started taking off like a rocket ship and pretty much 2x, almost 3x the revenue in the next 5 years. Mercado Libre is starting off on roughly the same path right now, especially since they've achieved profitability. This business just really reminds me of Amazon 5-6 years ago when they were really ramping their business in a hardcore fashion. I absolutely love this company. All of the metrics are beautiful. Take a look at their PE ratio for 2024 at their current price, which is about 16.30. They fell off about 10% here after earnings. It was really one-time tax items, guys. They had about a 54% miss on EPS. If they would not have had one-time tax issues, they would have actually beat on EPS, and they did come in with a little bit of a beat on revenue as well. One thing's for sure, guys, if we dip back down into anything with a 1500 handle in front of it, I will be starting to accumulate and building a position for Mercado Libre to hold over the next 2, 3, 5 years indeed. Now, their PE 2024 is about a 47, but when you take into account their EPS growth rate, we get to a PEG ratio of only 0.92. That is for growth through 2027 at current share prices. So that is an extremely attractively valued growth company, in my opinion. Now, let's take a look at the earnings headlines. Mercado Libre tumbles on Q4 report. Sales top views. Earnings miss on tax hit. So Mercado Libre stock tumbled Friday on a mixed fourth quarter earnings report. Revenue for the Latin American e-commerce company surged 42% to top expectations, but a pair of one-off tax hits took a bite out of profits. So they earned about 3.25 on EPS on sales of 4.3 billion. If you were to remove the tax liabilities, they would have put in about 7.16, which would have beat the expectations, but they did have a nice beat here on sales, 4.3 versus 4.1. Mercado Libre's net income was 165 million for the quarter, compared with expectations of 361 million. Once again, the tax event really playing against them. I know taxes are a real expense and you have to pay them, but just goes to show, guys, that if everything was going correctly and they didn't have that one-time tax expense that they were not expecting, well, they would have came in line and beat in terms of that. Now, Mercado Libre, fintech e-commerce business grows. Often called the Amazon.com of Latin America, Mercado Libre operates an e-commerce platform across 18 countries, with Brazil, Mexico, Argentina its largest markets. But the company also offers payments and a Venmo-like digital wallet throughout the region. The total volume of payments handled by Mercado Libre's fintech arm climbed 57%, guys. That's a huge quarter-over-quarter jump from Q4 2022 all the way to Q4 2023, 56.5 billion for the December quarter. Keep in mind, PayPal, in terms of gross payment volume, does about $400 billion. Mercado Libre already up to $56 billion and growing aggressively. The gross merchandise volume sold through its e-commerce marketplace climbed 40% year over year to $13.5 billion. So they're really operating, fueling on all cylinders here. Their e-commerce business is strong. Their fintech business is strong. Just very, very good, guys. The CFO saying, we multiplied our revenues by 10x while achieving significant improvements in profitability. This is over the last 6 years, culminating in nearly $2 billion of operating income in 2023. Very good. Analyst Scott DeWitt reiterated a positive outperform rating for Mercado Libre and upped his price target for MELI stock to $2,000 from $1,800. DeWitt wrote to his clients that Mercado Libre is executing across e-commerce and financial services, and boy, are they ever, guys. Absolutely outstanding earnings report from them. We're going to go through a couple of their earnings slides, and then we're going to tackle some of their financial statements, and I'll show you guys why this company is so strong. So look at this momentum for their marketplace, guys. I hope you can see it. Colors are a bit off, but this is gross merchandise volume. Very good. Take a look at the consolidated here for your Q4, essentially up. Everything is perfectly up. Gross merchandise volume. Items sold also netly up roughly about 30% on a consolidated basis here, and total unique buyers has been steadily increasing over the past year, all the way up to 54 million unique buyers. Their logistics, this company delivers extremely fast and is generating almost the same percentages as Amazon. Fulfillment reached a new record of almost 50% of shipments, growing in all geographies. Look at this, guys, almost 122 million same day and next day shipments in Q4 of 2023. That's absolutely amazing. They shipped a total of 407 million items during the quarter. Take a look at this, guys. Very good. 52% of all of those orders were filled the same day and next day shipments here. Their managed network penetration, guys. This is once again almost Amazon style of market penetration, right? So in all of these markets, it just means that if you were, depending on the location where you are in those countries, you should 92 up to 97% of all these populations, regardless of where they live, should be able to order from Mercado Libre and get delivered to their house. That is outstanding market penetration, if you ask me. Now let's take a look at some of their other highlights. You can see their fintech segment highlights growing extremely quickly, guys. Look at this: acquiring and digital account, total payment volume, net ramp in total payment volume up to $56 billion. That's huge, absolutely huge growth. Their total payment, total amount of transactions is year-on-year growth of about 76% as well. Very good. And their unique fintech and active users and wallet payers is also netly up. So generating more money and generating more popularity as well. Everything moving in the right direction. We're going to skip over their credit highlights because that's a very small segment of their business, but still performing well there as well. So here's your revenue growth as well. So net revenues, netly up as well. You can see this absolutely phenomenal growth on a year-over-year basis, 83% growth, everything moving in the right direction for Mercado Libre. The commerce revenues, here's your commerce revenue growth as well, everything moving in the right trajectory, 91% growth from a quarter-over-quarter basis. That's absolutely substantial growth if you ask me, guys, right? And here's your fintech revenue growth. Fintech revenue growth is as well just as substantial, 73% when you measure quarter over quarter on a yearly basis. So everything on a quarter over quarter basis, guys, is looking extremely strong for the company. E-commerce moving in the right direction, fintech business moving in the right direction. Really nothing bad to say about the company as a whole. Now, let's take a look at their financial statements to get a better idea of how they performed on the year. Give me a quick second. All right. So net revenues, guys, 4.3 billion. That's their net amount of money, right? So up 42% year over year, 83% on an FX neutral basis. That's absolutely insane, guys. Income from operations, 240 million. It would have been almost 600, excluding those tax expenses. 56.5 billion total payment volume, up 57% as we just saw, and 13.5 here, up 39.9%. Very, very good growth, guys, for the past quarter. Now, let's take a look at this as well. Important headline. We welcomed almost 50,000 new advertisers to our ads platform in 2023, which we believe is an indication of its importance to sellers and the strength of our product. They're basically pulling an Amazon, guys, now resorting to putting advertisers on their platforms. And you guys know from the Amazon earnings, advertising is an extremely profitable segment of their business. So it should really help to drive those net margins higher for Mercado Libre as well. Now, let's take a look down here, guys. I just want to show you as well. We're going to go through a few of their financial statements, not that many. I just want to show you guys how well they've been performing on a year-over-year basis. Take a look at this unique active users bump across all their lines of business, up 47% to 220 million almost from 2022, 47% bump. Gross merchandise volume from their e-commerce business on a year-over-year basis, 30% jump in terms of that. Absolutely phenomenal. Total payment volume for their fintech business also up 47% to $182 billion over the course of the year. Very good. Total payment transactions is also netly up 73%. And look at their capital expenditure. With all of this growth, capital expenditures remaining roughly flat, and they guided as well for roughly flat capital expenditures in 2024 as well. This company is now finally at scale. They spent the last 2 years making a lot of investments into infrastructure, and now those investments are finally paying off. The company's finally starting to have that positive profit ramp here, and it's just going to get better and better and better. You can see right here that they started off over the course of the year. We had the Q1 6.62, 7.67, 9.5. You guys get the point. They're finally operating at scale, and now they're finally delivering more and more net margins to the bottom line. Not much capital expenditures, and their operating expenses as well are not really growing as fast as their revenues are. So really everything for the company moving in the right direction. It's exactly what I want to see for any business that I'm choosing to invest in. So if we're taking a look at their income statement, we just want to see as well whether or not the company has positive operating leverage, meaning is it growing revenues faster than it's growing its different lines of expenses? And indeed it is. You can see revenue bump here on a year-over-year basis is roughly about 37%. The cost of goods sold for this company is only up about 35%. So revenue increase outpacing your cost of goods sold. As well, if you take a look at the operating expenses down below, which includes your R&D, sales and marketing, provision for doubtful accounts for their credit division. This is just putting money on the side in the event that people default on their obligations for credit cards. And then your general administrative expenses. All of these operating expenses combined only grew at roughly 30% year over year. So still revenue outpacing the growth of your cost of goods sold and outpacing the total operating expenses growth rate as well. So the company does indeed have positive operating leverage. So their balance sheet is good. Their income statement is good. And just to reiterate, guys, that their balance sheet is indeed good, we'll go down here and take a look at their net debt section. So you can see in 2023, their total debt stands at roughly $5.3 billion, but they do have some decent cash and cash equivalents and some investments as well, which brings their net debt only to about $1.5 billion. So truly very well set up. Their balance sheet is good. Their income statement is good as well, shows that they have good operating leverage. They're growing excessively fast, and they have a large command on their markets. They are the market leader in terms of fintech and e-commerce in Latin America. And those are two very big segments of any market, and they have full control over it. That is why I like this stock so much. I would have no problem seeing this stock go well beyond the all-time highs, guys, over the course of 2024 into 2025, reaching about the mid $2,500 range. The valuation does allow the price to expand that much. And if we get in roughly in the 1500 handle, if I can see 1550 even, I'm going to take this and really start riding this one to the upside. I do think new all-time highs are in sight within the next 6 to 12 months as the company just continues establishing its dominance in Latin America in those two segments. So hopefully I was able to convey why I like Mercado Libre so much, guys. Such a strong company with strong fundamentals, and it really in two segments of the market that are just continuously expanding year over year, not only in Latin America, but worldwide as well. And that trend should continue indeed. So hopefully you guys enjoyed those earnings. Now let's run through our major technical analysis here on our indexes, shall we? So taking a look at SPY, guys, this is the area where I start to get a little bit nervous. Yes, we are trending beautifully. The bulls are still in full control of this daily uptrend right now. However, we are approaching the top end of the trend line. The week finished off well, but we're still overbought on the weekly. Keep in mind, we are still in a bit of a lull period for the markets, guys. A lot of things potentially working against us right now moving forward. We have the negative end of February and March seasonality to be watch out for, notoriously bad for the stock market. So we also have no news reports coming out for the foreseeable future, at least for the next 2-3 weeks. CPI is only about 3 weeks at this point, and Jerome Powell only only speaking on March the 20th. So a bit of a lull period, and the fact that we also don't have any more tremendous earnings reports from big tech to come out and potentially save the markets. So those factors combined, guys, really leads me to believe that if we do get a sell-off, it's going to be tough for the bulls to keep holding up this market. That being said, the bulls do still have current control, but I would be wary of this gap up open on Friday into a bit of profit taking. If your hourly downtrend continues into Monday, we could be getting a little bit of daily consolidation still. Anything above 493.50 is just going to be looking for a daily higher low. But the nervousness happens if we take back too much of this move coming into next week. We could potentially set up for the daily lower high into lower low flush. And if we lose this trend, keep in mind, guys, this trend has been in effect since pretty much mid-December. If we were to lose this higher low coupled with a loss of your trend line, that is when I do believe weekly consolidation will be underway over the course of March. But as I've been saying, the bulls still in full control need to prove to us that they can defend these highs of this market. Moving on to QQQ. QQQ, similar, right? Similar, but QQQ was one of the only ones to set the daily downtrend and was saved by NVIDIA earnings. So the market tried for weekly consolidation, but was rejected after NVIDIA earnings. So that being said, the bulls are still in full control. They've engulfed this most recent move of selling and now puts anything, pretty much any consolidation above, Wednesday's trading low, 421.83, is just going to be looking out for a daily higher low for further trend continuation. Now, we do have a decent area of previous resistance, which could be acting as support with your 12 EMA moving average right down there as well at about 430. But if the bulls lose too much of this, they set up for the potential rejection into lower high, into lower low conversion to the downside for the bears. And at that point, we'll just be expecting further weekly consolidation here. Anything above 395, just looking for a weekly higher low as well. So the bulls still in full control, but just the lack of positive catalysts moving forward and the fact that we don't have much news moving forward as well is going to be something that I'm watching out for in the markets. Keep in mind, as of recently, over the last 2 weeks, every single news piece that we've gotten has been quite negative. Jerome Powell was hawkish on the FOMC statement. The CPI reports that came out, both producer and consumer, were hot. So will the market, once we get out of this after NVIDIA earnings euphoria, will the market start focusing on the negative macro events that we got over the past month and start bringing down the markets in anticipation of new data that'll be released in March? That is what I'll be looking out for personally. But as of now, the bulls still in full control. Now, moving on to XLF. XLF and XLV, guys, these two indexes right here have been some of the main reasons why SPY has been able to maintain green over the past 2 weeks. You can see XLF, beautiful past 2 weeks. XLV, beautiful past 2 weeks as well, which has really led the SPY to maintain outperformance. But QQQ has been fairly mixed in that time, so most of the heavy lifting has been done by XLF and XLV. That being said, if these sectors start to roll over, as well as QQQ, that is when you're going to get an extended bit of consolidation and sell-off on SPY. I'll be paying close attention to how our market rotation stays alive in the next coming weeks. That being said, XLF still in a very healthy daily uptrend here. Anything above 39.30 pretty much, just looking for a daily higher low for further trend continuation. But if we lose this 12 EMA here, guys, pay big attention. We really haven't lost it much ever since the month of November, since this rally started. So that would be a big red flag for me if in the next following week we lose this level, set up for the daily downtrend, set up for weekly consolidation. That is when I do believe the indexes are in for a little bit of a ride to the downside, but so far so good. Weekly uptrend still had for the bulls. And if we do lose the daily for ever which reason, guys, just know that financials are extremely healthy. Anything above 37, just looking for a weekly higher low for further trend continuation. Now, if we disregard all the negativity and just push higher, you're looking at resistance areas of your all-time highs, talking about 41 to about 41.7, your all-time high area of resistance. Moving on to healthcare. Healthcare also looking pretty good. Daily uptrend was never lost by the bulls, still extremely healthy at this point. Overbought on the daily ever so slightly and still overbought on the weekly. Financials were just the same. My apologies, I didn't say it, but financials not yet overbought on the daily, but significantly overbought on the weekly. So a lot of things, guys, in the markets still remain overbought at this point. XLV, anything above 144, just looking for a daily higher low for further trend continuation. But if the bears take back too much of this move, look out for the lower high into lower low. And we're going to be looking for the bulls to defend this 12 EMA with their lives, as similar to XLF. They really haven't lost it that often since the November rally, so any loss of this coupled with a daily downtrend should be very notable. It should lead into a few weeks of consolidation at least. At least the XLV bulls have a decent amount of space, anything above 137.35, just looking for a weekly higher low. And at this point, guys, we're so nicely above your previous all-time highs that now we can be using them as support for any pullback, and your 12 EMA on the weekly should be catching up if we do have some consolidation. So just keep an eye, guys. Pullback area, in my opinion, likely to be your previous all-time highs. Now, let's move on to IWM Russell. IWM Russell still doing a whole lot of nothing, still really trapped in this range of consolidation. Why? Such a big area of resistance, guys, over the past 2 years, pretty much at this point. And I've been saying over the past couple of weeks, if we cannot close a weekly candle hard above your 200 range, the bulls are just going to continue consolidating here, accumulating some momentum. And eventually, when the markets do turn around for a more favorable outlook here in terms of interest rates specifically, that is when I do believe we'll get the clear break and hold above, retest this whole area as support, and then be on for a significant rally later on to 2024. But as of now, bulls still struggling. We'll be looking for Wednesday's low, crucial level for the next week, guys. If we lose Wednesday's low, it'll be a daily downtrend set. And at that point, guys, just heading into further weekly consolidation. Now, the good thing about this weekly consolidation is that it's really at the top end of this entire move up. Exactly what you want to see. Bulls not giving back too much space, trying to maintain very, very tight in the top end of this range, keeping themselves within striking distance of the breakout of this entire range. And that's going to be a very big breakout, guys. When we break out, sit above it, that could be a beautiful entry here for the continuation of 2024. As of now, we'll be very, very wary on this 196.50-ish level, guys. If we lose it into next week, daily downtrend, at that point, you're just going to be looking for the tightening up of this range. Wouldn't want to see us lose our previous level of support down here. 192 is pretty big for the Russell. If we were to lose that, guys, you know, we might be in jeopardy of really setting up for a potential weekly downtrend here if we break any bit lower than 187. So those are the two levels to be watching out for. First stop is going to be your 192, then the last line in the sand, 187 down here. Watch out for those over the next couple of weeks. If we do break below here, it will be fine. Just a little bit of further monthly consolidation for the Russell. And you guys know my sweet spot, 187 to 182 is where I'm looking to pick this one up myself. Now moving on to the Dow Jones. Dow Jones still looking healthy in spite of everything, right? So Dow Jones currently still in a daily uptrend. And this is another index, guys, that the 12 EMA is going to be your major guide. If for ever which reason over the next week, guys, we lose the daily uptrend, set a daily downtrend, lose this 12 EMA, well, you will be in for weekly consolidation. Good thing the bulls have a lot of space, anything above 37,100, just looking for a weekly higher low for further trend continuation into 2024. No red flags for the Dow Jones as of yet. The bulls have created a ton of space. Just watch out for this Wednesday low right here, 38,333 on the mark. If the bears take back too much of this move, could just set up for the rollover. But as of now, guys, everything's still healthy. Just looking for the daily higher low for further trend continuation. Have some good now support at this area as well. Previous resistance, newfound support. 12 EMA is there as well. 38,750-ish is going to be that line. So I'd be very wary if we lose this level. Could be using it as resistance setup, guys. The reason I'm giving you the setups to the downside is that is the unprobable scenario now for the market. Yes, of course, I've been calling it for a while, but when you look at the overall markets, guys, there's a lot of greed in the markets currently, and everybody's expecting the rally to continue, so I just don't want anybody to have any negative surprises. Now, all of that being said, let's tackle our big tech, shall we? So Apple on the day, down 1% on Friday. Not too good. Apple will still be looking to protect these lows. 180 is so crucial for Apple because this is the area that if they were to lose this, daily downtrend is set. And at that point, if you lose 180, your weekly downtrend is set as well. If we lose 180, is it that big of a deal? No, because it's still a monthly area of consolidation. I do believe your previous all-time highs, 180 down to about 167, is going to be a very juicy area of support for the bulls. So the bulls, even if we lose that 180, they still have a lot of room, guys, that they can use as support. So not too nervous for Apple. Apple tends to do this, as I've pointed out, right? Big move up, consolidation sideways for a couple of months, big move up, consolidation sideways for a couple of months. Same scenario for Apple right now. So if Apple continues its drawdown into the mid 170 range, I will be looking to play Apple, guys. Anything below 180, you guys know that I do love to play Apple quite aggressively. That being said, The bounce recently was not very high. They've just now lost the hourly trend. So I keep saying, guys, whenever our daily bounce is underway, that is denoted by a recapture of the hourly trend by the bulls. Now the bulls, unfortunately, having lost the hourly uptrend into Friday, leads us to believe that this daily bounce is unfortunately finished, and the size of the daily bounce was not sufficient enough to warrant the bulls' capacity to have a shot at the daily higher low and trend reversal, right? We only got about as high as about 38%. Or about 38%, not high enough, guys. I was saying I need to see a bounce to at least about 187 to give a good shot at the bulls to be able to reverse this into a daily uptrend. So now, not looking the best. The probabilities do favor the follow through to the downside by the bears. So I will be looking out for Apple in the next coming weeks in the mid $170 range. That being said, not looking terrible. If you look at the longer term time frames, your bulls are still in control of the monthly, barely holding on to the weekly, and unfortunately bears control the daily. So we will be looking at our longer term bulls to be buying some dips here in the 170 zone. Now moving on to AMD. AMD as well, consolidating after such a beautiful day after NVIDIA earnings on Thursday, consolidating 3%, AMD not able to break out of its previous all-time highs. So your range of consolidation now continues. It's been about 4 or 5 weeks of consolidation for AMD at these levels. Now, the good thing is that they are still holding up their previous all-time highs as support. But if ever they lose this, guys, if we roll over into a daily downtrend and start flushing these levels over the next 2 weeks, I would be very, very cautious about AMD. At that point, guys, your next area of support really comes down to the 140, 145 zone. So a fair bit of a drop if that were to manifest. We're talking about a 20% probable drop. Now, AMD does still have some good factors behind it, like it's still caught up in the AI and chip hype, right? But if all semiconductors pull back, AMD will not be spared, so I would be fairly wary of this. That being said, the bulls currently still in control. We're just looking for a daily higher low, anything above 160, 172, looking for the daily higher low and potentially still for the breakout trade. Why the breakout trade? Well, your bulls are still in long-term control of all your time frames. Monthly uptrend and beautiful weekly uptrend as well. This is just, as of now, a weekly bull flag. So the technicals would point to the probabilities favoring a bullish breakout. But if the overall market pulls back, AMD will not be able to do it on its own and will revert to going to the lower levels. So I personally would be looking to play AMD. If ever we fall down below 150, that is where I'm going to start playing AMD a bit more aggressively myself. Now moving on to Amazon. Amazon up 0.23% on the day. Not a bad day for Amazon. Amazon just looking to protect this daily uptrend. Kind of sideways though ever since earnings. This reminds me of kind of Netflix and Meta at the same time. Their charts look relatively the same. Big gap ups after earnings and now just tightening consolidation here. Amazon really not able to break to the higher levels. And this is kind of one of the red flags that I'm having with a lot of these stocks, guys, right? Amazon, despite how positive the markets have been over the past couple of weeks, unable to break above this big area of resistance, the all-time highs, right? Meta, same thing. Meta really struggling to break and hold above. Netflix as well, broke above, but kind of struggling to get the follow through. So you can see, guys, the bulls look a bit tired currently. That's why I'm expecting if we do get a broad market pullback, everything's going to pull back to more reasonable valuations. If QQQ and SPY pull back 5, 6, 7%, a lot of big tech will be off their highs, their recent highs, by about 10, 12% perhaps, and that's going to be a last shopping opportunity for us to buy these stocks for the remainder of 2024, in my opinion. So Amazon looking healthy, but keep an eye, 166. If we pull back too much from this move and set the daily downtrend, it will just be daily downtrend and further weekly consolidation. Amazon, tons of space to give back here. Anything pretty much above 145, just looking for a weekly higher low for further continuation. So the bulls are in full control, but the next level of resistance, guys, stays put close to the all-time highs. We're talking 177 and then 187 break for your all-time high. So a big area of resistance for Amazon to be approaching right now. We'll see how they deal with that in the next few weeks of trading. But I am personally looking out for a potential bit of further consolidation if the market were to roll over. But as of now, the bulls in full control. Google also struggling here, right? So we're looking out for the tightening range on Google after having lost this beautiful daily uptrend, earnings flush, lower low. Now the bulls have been trying to recapture this. That's why I say the size of the bounce is key. Look, after this drop, the size of the bounce right here was about 70%. So it gave the bulls the best chance of setting a higher low and then going for the daily trend change. That would be a break of 151. But so far, the bulls are struggling, right? We had this little bounce getting going last week, but into Friday, really struggling on the lower time frame. So we'll see if Google loses the hourly into Monday, could potentially be heading to further tightening range here. But I would be watching out for this level right here, 141. Crucial area. Lose that for Google, you lose the daily uptrend, it becomes a daily downtrend. And at that point, guys, weekly consolidation simply continues. It's been about 5 weeks of weekly consolidation now, and the weekly higher lows are close. It's about at 137. They do have a very big area of resistance, which is now current support. So at least Google is looking good. I love playing Google. Anything below 140 to 137-ish, I will play that all day, guys. Google valuation right now is extremely attractive for 2024 and 2025 inclusively. So I will be looking to play the stock if ever we get that extended drawdown here into the mid 130 zone. I think it's a no-brainer. The weekly uptrend is still very healthy. They're still working with a little bit of space here all the way to 137. So just keep that in mind when looking to play for Google. Your bulls in control of all the longer time frames, monthly, weekly, just the daily here, just struggling ever so slightly since your earnings, but at least we have very solid support that we're coming on soon. Now moving on to Meta. Meta struggling to break out. As you can see, they did almost hit 500. They hit about 495 before pulling back. New all-time high on the day on Friday for Meta, but pulling back, you can see this aggressive gap up open into hourly downtrend right away. So if we do head into daily consolidation, guys, keep an eye on this key level right here, 462.36. If you lose this, you lose the daily uptrend, you open the door for the lower high into lower low conversion, which would just be weekly consolidation for the bulls. It's a good thing that Meta has a lot of room to give. 342.10 is your past weekly higher low. So any pullback beyond that point, just looking for a weekly higher low for further trend continuation into 2024. No red flags for Meta's business whatsoever, but still, bulls kind of looking a bit tired here, guys. If it wasn't for NVIDIA, I do think the market was ready to consolidate. So going to be seen if the market will consolidate. Keep in consideration, guys, Meta on the weekly, the RSI is just so high right now. It's very tough for me to buy Meta up here. I would much prefer if we do get a little bit of drawdown over the coming weeks into the month of March. 420 is a very sweet spot for me that I will be looking to play Meta in. Now moving on to Microsoft. Microsoft also consolidation on the day. So you can see big gap up open into profit taking all day. So if Microsoft ends up in a daily or in an hourly downtrend as of Monday on the open, we'll be looking for further daily consolidation. Now, at least Microsoft was in a daily downtrend, engulfed the move, so they've created a lot of space off of these lows, 397.41. So we'll be looking, can the bulls protect this with a higher low and higher high and revert the daily trend back to them, which would mean weekly consolidation is over. If you ask me, guys, my bias is still to the downside. If ever we do take back too much of this move, set up for the lower high into lower low for a daily downtrend continuation at that point and further weekly consolidation at that point too. Microsoft, tons of room to give back anything above 366, just looking for a weekly higher low for further trend continuation. My spot for Microsoft personally, if we can get down 390, 385, I'll be looking to play 380 and below in terms of some short puts. I really like Microsoft for 2024. The company is growing very well. Nothing bad to say about it whatsoever. Now moving on to Netflix. Netflix as well, right? Broke out of this area and now struggling. Usually when you get these big breaks of key zones, the bulls tend to run away with it, but they're not running away with it right away. 575 is still a big area for the bulls to protect. Now, they did have a nice job here. They had earnings, right? Daily downtrend, which was just very healthy weekly consolidation. And then we had the break above the 575, a breakout, retest of 575, supposed to run, but getting a bit caught up. So I'll focus on Wednesday's low once again. 568 is going to be the level to watch. If you break this to the downside, it's daily downtrend confirmed. And then we're going to be looking, guys, will the weekly come undone as well? It won't be a weekly downtrend if we lose this. Weekly downtrend is lower high, lower low, but the bulls could just lose the weekly uptrend with a big flush to the downside here before potentially recapturing it later in April. That is the move that I'm personally looking out for. That would be a position for the bears to be able to pull down a little bit like this. Moving on to a monthly higher low, for further trend continuation into 2024. Netflix for me personally, guys, I'm looking for 520 and better. That is when I personally start playing Netflix. Until then, a bit of a hold for me. The bulls still in control, but looking kind of soft. Not gonna lie, was expecting a more continuation from a lot of these names, right? Amazon, Netflix, and a couple of them that have really reached all-time highs after earnings. Meta as well. Was expecting some further continuation, but just goes to show potentially the bulls are getting tired. Now moving on to NVIDIA. NVIDIA as well, bulls kind of tired after the earnings move. That being said, huge gap up open on Friday, all the way as high as about 823 in your first few minutes of trading, and then pulling back for the remainder of the day. A little bit of consolidation. One thing's for sure, NVIDIA is still looking very good. No red flags whatsoever. Just looking for a daily higher low. Anything above 661 is just looking for a daily higher low for potential further trend continuation. But I'd be very nervous if NVIDIA loses this level. 740 is going to be previous resistance, should be acting as support right now. If we lose that level, you take back too much of this move, guys. Could set up for the lower high into lower low. And at that point, guys, we would be heading into weekly consolidation for NVIDIA. Good thing NVIDIA has a lot of room back to give. Anything above 479, just looking for a weekly higher low for further trend continuation. So in NVIDIA, no red flags, excuse me. No red flags as of yet, guys, but still just looking a bit overbought at the tops here. You also have a bit of divergence as well. So higher highs on the market, lower highs on the RSI. Usually the market tends to correct in the direction of the RSI. At least NVIDIA working with a lot of space. Tough for me to buy it up here. I would like to see semiconductors as a whole have a bit more consolidation through the month of March. It's going to open some buying potential. If I can get as low as 620 to 600, guys, that is when I'm going to be making some plays on NVIDIA myself. Now our three last ones, Tesla. So Tesla was looking good. We had the daily uptrend underway, and then we were looking for the daily higher low for further continuation. But unfortunately, guys, on Friday, what happened is the bulls got absolutely crushed by the bears. Look at this, right? We lost the hourly time frame into Friday. Hourly downtrend at this point, and that's not good. When we get the hourly downtrend, if we get continuation, guys, if we break 189.64, you're going to be looking for a daily downtrend on Tesla. A daily downtrend on Tesla after such a weak move, we're looking on the weekly now. So inter time frame analysis is key. When we got the weekly bounce underway, that was denoted by your recapture by the bulls of the daily uptrend. And now if we lose the daily uptrend, it means your weekly bounce is finished. And the weekly bounce was not strong at all, guys. How much of this big move down did the bulls recapture? Barely 28%. Not good enough. It favors the probabilities of a furtherance of the weekly downtrend to the downside here. Downside targets to remain 180 to 170. Big area of previous support. And it is the downtrending channel line as well. So decent area of confluence down here. Not looking good for the bulls right now. Cyclicality continuing to plague Tesla. In my opinion, guys, it's going to be tough for Tesla to really muster a weekly recapture of the uptrend much before interest rates start coming down and more bullishness comes into the stock, and more specifically into the EV sector as a whole. So I will be continuing to look to play Tesla. However, 180 down to 170, as close as possible to 170. If you get down to 170, it's a no-brainer play for me, in my opinion, but just not looking good right now. Very possible we get the daily downtrend and just continuation of this weekly downtrend as well before really getting into some oversold conditions down here. Now moving on to Palantir. So Palantir, guys, not looking good as well, right? So Palantir, we kind of struggled at the daily top right here. Bulls were healthy, daily uptrend, but double top and kind of hesitation at the top. Now, keep an eye, guys. Wednesday's low is key on a lot of these stocks. If we break Wednesday's low, it would be daily downtrend, and daily downtrend means weekly consolidation is just going to continue. Keep in mind, weekly consolidation, we're targeting this area down here, 2150 down to about 20.5. Big area of previous support, big area of resistance, your previous 52-week highs over this past year. So if Palantir does continue to consolidate, guys, into the lower $20 mark, that is exactly where I'm going to be looking to play the stock directly myself. $20 or lower seems to be like a very juicy area for the retest, right? Breakout into this whole range right here, at the nice breakout, retest of this range to rally potentially later on in April. That's the pattern that I'm looking for on Palantir if we get some extended drawdown. Now, obviously, the bulls can reverse this. If we simply just put in a higher low right here and reverse this onto a new daily uptrend, it will just be weekly higher low, and your weekly uptrend just continues. At that point, guys, upside targets do remain $28 to the upside. But as I said, market's looking a bit frothy, a bit tired. I would not be surprised if Palantir continues to pull back, even got the MACD cross on the daily down here. So further downside potentially projected. At least we have a big area of support that we're coming up on soon. And now lastly, PayPal. So PayPal, again, struggling a little bit, 1.39% to the upside. At least it was green, but still in our area of congestion, 60 down to about $57. This is the area that I say the bulls can absolutely not lose, or else all of the weekly structure really starts coming undone. Now, keep in mind for this, guys, if we break 60.15 to the upside, it's looking good. Daily uptrend recaptured. Daily uptrend recaptured means that your weekly lows are set. And thank goodness that the bulls have not allowed the bears to close below your $57 range. You see all these wicks right here, not able to close below 57. That's crucial. Why? Because it's still a weekly uptrend, a very weak weekly uptrend right now as we keep double, triple, quadruple bottoming in this area. But nonetheless, as long as we don't lose this, this is still within a weekly tightening range, right? So at least it's looking good, but to look the best, I keep saying it, guys, what needs to happen? Number one, we need to mount above 60, use this area as newfound support once again, and then attempt to break this downtrending channel line that's been in effect for pretty much the last 2 years. Only when we do that will the stock be able to get more and more momentum, in my opinion. For now, it's just kind of relegated back down to the lower areas. And obviously, guys, if we flush 57.20-ish and set the daily downtrend in the next couple of weeks, and even at that, lose the weekly uptrend and really get sent into further weekly consolidation, I do believe that likely price targets for PayPal at that point become 55 and even as low as potentially $50 as we just continue in this extended downtrend. Very, very, very crucial year for PayPal to execute on everything it said that it was going to do in terms of cost control, product expansion. Going to be crucial to see. One thing's for sure, 55 down to 50 becomes a no-brainer for me for this stock. So just keep an eye. Crucial level down at 57 to watch out for on PayPal. And to the upside, a break of 62 will likely get some follow-through momentum up to about $66, $68. So those are the levels for PayPal. And now lastly, we're going to do Intel from our subscriber request. So Intel, if you haven't seen my video on Intel, guys, about 2-3 weeks ago, at the same time I posted the, in that same video was Intel and Visa earnings. So if you haven't seen the fundamental breakdown of Intel, I suggest you go watch that as well, just for general analysis as to the financial setup of the company. Now, a lot of their lines of business have been underperforming, guys, and Intel, you obviously know we've covered this during their earnings. They're in a bit of a transition period. This is not the same company as it was prior to the pandemic, and I want to make that clear. Look at this clear drop off in earnings per share. Now, earnings per share will be growing through 2027, but nowhere close to what they were pre-pandemic. And revenue as well for the next 4 years still will not be as high as their best years, 2019, 2020, and 2021. So keep that in mind when you're thinking about Intel. The price has recovered so slightly, but the fundamentals of the business have not. That being said, let's do some technicals on it. So Intel currently in a weekly downtrend. Now this bounce on the weekly was fairly weak. So look at how much of this move the bulls took back. Not much, right? Not much at all, as a matter of fact. The bounce only went as high as about 38.2%. It gives the bears the opportunity for the continued flush of this weekly downtrend to the downside. These two yellow lines are this massive range that Intel has been trading in for a significant portion of the past couple of years, with obviously some spikes to the upside and whatnot. But really 50, I know it's a wide range, but 50 down to about 42 is the area that once you're in it, you don't really want to go back under it, because then it whole area becomes big resistance to the upside, and your downside targets become something like $38. $38 is where I personally would not mind starting a position in the company. A little bit too high for me. I would need an extra 10% of drawdown for the company to do that myself. That being said, keep a very close eye, guys. 42.39 on Intel. If you lose that into next week, it's daily downtrend. It is also the furtherance of your weekly downtrend as well. If we break through these moving averages at 41.68, that would not be good too. This green one is the 200-week moving average. If we start trading below that, guys, we really are probably heading down to the $38 range, which is previous resistance, should now be acting as support. The problem with Intel, guys, is that it wants to be part of the semiconductor family so bad, but it only gets some of the SMH upside, but all of the downside. So take a look at Intel stock in the past 5-6 weeks, and then take a look at SMH, which is your ETF for semiconductors over that same period. You can see notable difference, right? But it's not only of the past few weeks, guys. Take a look at this. When you take INTC divided by SMH, look how badly it's been underperforming the semiconductor industry as a whole, despite being part of that industry. And the past 5-6 weeks, you've really had that stark contrast. There was a period here from July all the way through January that they were slightly performing on par or slightly even better with SMH. But on the grand scheme of things, guys, not the best looking chart on a relative basis to the ETF that they are a part of, right? So that is one of the main problems. As I said, it gets some of the upside, but all of the downside when semiconductors start dropping. And if you want to compare that with one of the leaders in the industry, look no further than NVIDIA divided by SMH as well. You can see how they have a significant command over this, right? When SMH moves up, NVIDIA is a large portion of that, and they move up even more, right? And it's not only NVIDIA, right? You can take somewhat of a middle company like TSM as well, right? So TSM has been struggling just the same with the semiconductor industry, but at least in the past 4 or 5 weeks, it has been performing on par with most of the gains here. But you can see even TSM has been struggling to keep up with some of the gains, such as NVIDIA or AMD stock over the past, 2 months or so, stuff like that, right? So even TSM, but TSM, I just like the fundamentals better in my opinion than Intel, but it's noteworthy, guys, that when you have some of these companies that just don't perform as well as the underlying index which they're a part of. So just keep that in mind in Intel. Normal for you to see a lot of semiconductors up on a given day, but Intel down, and that's been a frequent occurrence here over the past year or two. So all that being said, guys, let's now dive into my portfolio. So guys, taking a look at the portfolio, you can see that we are still standing at roughly 5.68% performance year to date. Now, we are still underperforming the NASDAQ and the S&P 500 by just a little bit. NASDAQ outperforming us by about 1%, and the S&P as well outperforming us by about 1% to the upside. I do believe in our capacity to beat the index for the rest of the year. However, just this week was a little bit flat. We did do a good job of generating a lot of premium, writing put options and covered call options. However, a few of our underlying positions that we got assigned did dip. So it kind of counterbalanced themselves, but still a decent week of premium generation. Now, let's take a look at the positions, and there is one big change that I'm going to tell you guys about here. So BABA, we had the 79 calls here for the week. Unfortunately, it doesn't show the price that we had, but BABA, you can see here, guys, that we did write these 79 calls for about 17 cents, just looking to average down on my Alibaba cost as a whole. So my average cost right now, didn't put it in this tab right here, but the average cost should be now down to about $78.05. Good job bringing it down from 82. I continue to say if Alibaba trades within the mid 70 zone, I'll just continue to write puts down here and just add to this premium total, just reduce my average cost a bit more on Alibaba. Then we had CSIQ, we had covered calls on those. It was a roll from the week prior. So it was a roll to about 23.5 for free, up from 23. But the thing with CSIQ, guys, is I sold my shares for a $1,492 loss. And I'm going to explain why right now. So number one, we had a tightening range pattern right here, which broke to the downside on Thursday. And when I saw that, guys, it was not good. And after a little bit more research, we did have a few earnings reports from solar companies over the past week. Solar Edge, not good, down about 20% after their earnings. Sunrun, another solar play, down over 20% after their earnings over the course of last week. CSIQ has earnings here in about 2 weeks, but I don't expect it to be any different for the company. And just solar plays as a whole, guys, on Thursday, when the entire market was rallying to the moon, solar just getting left behind. So if it can't even rally when the market has been performing well, and I am personally expecting a little bit of a market slowdown into end of February, early March. I just don't want to be in a situation, guys, where after farming premium so close to my cost basis, 25.14, we end up in a situation where we're really flush below these lows right here. down into the $19, $18, even $17 range after earnings. Would not be surprising if the industry trend does continue. All solar companies that have reported earnings so far this quarter have pretty much been at net losses after the day of earnings. And even a company like Enphase, which reported substantially good earnings, you can see them right here, right? They had a significant boost in earnings, but now largely starting to give that earnings gain back. So I just want to protect myself. So I sold my shares at about 21.40 on Thursday. You can see that order right here. It's pretty much a bunch of different orders. I don't know why it was just one order though. $21.41. We locked in a loss. $1,500. Am I going to be playing it in the future? Yes, but I don't believe there's an immediate necessity to be playing solar right now. So I still love the company. I still love the industry, but I think it's going to be a while before it recovers. And if I can make the same play on CSIQ, maybe in a couple of weeks or a month or two down the line at an even lower price, it's an even better bargain for me. So just doing a little bit of risk management. Now, GDXJ. So GDXJ, we had some covered calls on for the week. You can see here that GDXJ, we got assigned at pretty much $33. And our average cost after the assigned puts and some covered calls is down to about 32.26. Now, it's not on here because I wrote them the Friday prior, but we got about 1% on those covered calls for the week. So we're still above our break even right now. Stock's currently trading about 32.32. So if this does pull up into the beginning of this week, I'm going to be looking for a little bit of a rally into Monday and then trying to sell covered calls as close as possible to our $33 strike, which should give us some very decent premium running. All in all, decent position, guys. I love this level on GDXJ. 33 down to about 31. Such a big area of weekly support going all the way back right to prior of last year in 2023. Now, we got assigned some Rivian. So I did write some options plays on Rivian leading into earnings. And you can see those right here, guys. So Rivian, I wrote the 12.5s, two of them for 24 cents. And then we wrote one Rivian 12 put contract for 16 cents. Obviously, Rivian ending at $10. Well, we got assigned on both of those. Our average cost with all the premium collected and the difference in strike prices, our average cost is down to about 12.11. But this is why I tell you guys, be very careful when playing earnings. If you don't want to own a company at a given share price, just don't play them, because even myself after earnings, guys, we're already down about 20, 16, 17, almost 20%. I chose a $12 range for my strikes because it is the previous all-time lows, but after the earnings report, we just blew through them. I am comfortable with owning Rivian. I do want to give them a chance, and keep in mind, it is only 300 shares, so it's a relatively small position for me. The risk to reward for the upside is quite good right now. Rivian myself, if the stock does dip lower into the $8 range, I'll be starting to average in with some short puts to bring this average cost down, and I may even go in with a 1 or 1.5 year leap call option on the company, because I do believe in the company's ability to generate positive cash flow by the end of 2024. And I do think that the brand is enjoyed by consumers, so I don't mind making a play on Rivian. You guys may remember I made a play on it a couple times back here in November around this support area, but getting this company $10 or below, guys, when it's trading roughly at book value is pretty much the best value you could potentially have for this company at this moment in time, for if you do believe positively in the company for the long run. So I got assigned. Am I upset about being assigned to the position? Absolutely not. Only 300 shares. So we're going to try and work towards bringing that cost basis down over the next few weeks as well. Square had a little bit of an earnings play on Square as well. The 54 puts that we wrote prior to earnings. Didn't get so much on them, but it was a very conservative earnings play. You can see here, wrote the 54 puts for about 16 cents for a day's worth of trading. Now, Square prior to earnings was trading at about $68. So that would have been drawdown of roughly 21%. The expected move was about 10%, and we went 2 standard deviations lower, just trying to stay really safe. And this whole 54 area, as you can see on this weekly chart right here, the 54 area has been big support in the company's past. That's why I chose that area myself. Now, Applied Materials, we still have this call. I should have probably sold this call after their earnings on last Friday, but I stuck with it. The net cost of the strategy, because we did sell the 175 puts and then we bought these calls as well, we collected about 45 cents for the puts. So the net cost of the Applied Materials trade as a whole is about $1.20. We'll see how it goes over the course of the week. This expires on Friday, obviously. So hopefully I'll be able to maybe close it for a bit more, but still might end up taking a loss on this if the markets do continue to the downside. And then in terms of the rest of our trades, guys, we still have the TMF calls, 20-year bonds. They were up a bit on Friday. We have the shares down here as well. ETH and Bitcoin, Still just holding those, need to increase those positions if we get some extended drawdown sell-offs. Nike, not high enough for covered calls. Baba, we spoke about. GDXJ, we spoke about. My new Rivian shares, which we spoke about. Average cost, not quite correct here. And then you obviously have my Canadian banking shares ETF right here, up almost $1 a share, so performing well on those. Now, we did close some plays that don't feature here. So the plays that we closed, very, very simply, guys, we had the Apple 177.5s. We wrote those for 71 cents. We were able to close them for 90% profit here at 7 cents on the Thursday session. Tesla, we had the 182.5s that we got $1.24. We closed those for roughly 37 cents. I wanted to make another play. What we did is we took the value from here and we took Palo Alto after their huge dip. You can see we got $1.24 for those contracts on Palo Alto. And then we were able to get rid of those for 6 cents on the Friday session. So pretty much just reallocating the capital. Instead of staying in Tesla for this 37 cents, I'd rather take this roughly $20,000 and put it into Palo Alto for even more premium and just ride that out. Palo Alto was a very safe trade, guys. I mean, the stock was down, 25+%. We were kind of bottoming out here. So when it was about 270, 268, I took the trade for 250. 250, previous resistance, should act as a first line of defense. And I was ready to see it go down to about 230 in the event. So good trade there on Palo Alto. And there was a few other ones, right? The Google 140s that I got 75 cents for, roughly 0.5%. We closed those for 90% profit, closed those at 7 cents. The TSM 120s as well we had for the week, 60 cents, 0.5%, closed those as well, 5 cents, 90% net profit. We even had the Etsy's leading into earnings, Etsy 62s, 0.5%, 29 cents roughly. Close those for about 2 cents, 90% profit. So everything pretty much closed for 90% profit or better. Caesars as well, right? We had the earnings play on Caesars, 38.5s for 26 cents. Close those for 2 cents. So every single play we took this week, guys, everything went beautifully, except for this little bit of Rivian trade here. So quite happy with the way the week progressed. It's just a shame that most of the week was undone by this really, really heavy sell-off in CSIQ, down 10% from the Monday session. So that was really unfortunate since it was about 400 shares, guys. 10% was a fair bit of a drawdown, talking about $2, almost $800 in losses. So the amount of premium that I made on the week was offset by the decline in CSIQ. So I just said no more for CSIQ, really trying to protect myself. So in the next coming weeks, guys, we really have full buying power to make the most of this dip, and I'm ready to absolutely crush it. So let's get these profits together. Really looking forward to the next few weeks in the event of a market sell-off. So that was everything for today's video, guys. Hopefully you enjoyed that. If you did, consider dropping a like. Would really appreciate it for the algorithm. And secondly, if you are new to the channel, consider subscribing. We do these videos Monday through Friday, except for when I'm busy on Friday, then I kind of do them on Saturday. And tomorrow, guys, keep in mind, my top 5 options plays for the upcoming week video will be posted tomorrow night. So take a look at that. And as usual, if you have any questions whatsoever, always leave them down below. And if you want me to review anything, right? So we had a few subscriber requests today for some stocks, some earnings plays, some technical analysis. Leave it down below if you want me to look at that, or any options play you want me to look at. I will answer all of your questions. Just leave them in the comments. I'll get back to you within the first 24 hours. Take care, guys. Have a great rest of your weekend, and peace.